I'll make sure to do that before when will be that? Before 27th of this month. Today is 26th. Yeah, I'll do that before today is 25th. I'll do that before 27th. I'll dedicate a video for Fibonacci curves, and then we'll relate it to the market trends and how to trade. Yeah, thank you. So let's go on. Moving on. Ignore that. That's just a damn message. So candlestick patterns. Candlestick patterns are analysis based on the size. Candlestick patterns are analysis based on the size and alignment of price bars. So these ones here are the price bars. So now these are candlesticks are analysis based on price and based on the price and the sizes of the price bars. So these patterns can be effective in highlighting the conflict between bullish buyers and bearish sellers, and therefore can provide clues as to potential impending price movement. Candlestick patterns. There is going long 3 method information. That one. Go shorting 3 method going long 3 method formation, shorting 3 method formation. In this we can see there is this one uncolored, 2 and then 3 colored in between. This one 3 uncolored in between and 1 colored to the sides. We'll look at that. Going long harami. I don't know whether it's haramai. Okay, going long haramai. So this one seems to be going long haramai and shorting haramai. Well, we'll see that. And then going long haramai cross and shorting haramai cross. Shooting star, and then there's spinning tops, dark cloud cover, high-low sequence, open to close. Okay, that one is not well expounded on this book, so we'll move to another book. I'll look for another book and then suggest to us what we'll be going through with that book. So moving on to the next part, fundamental analysis. Fundamental analysis involves the analysis of influences that may cause a currency pair to move higher or lower. It involves the analysis of influences that may cause a currency pair to move higher or lower. Generally speaking, a currency pair will move higher if the economic influences of the base currency are more positive or a relative basis than the economic influences of the quote or term currency. Now I guess this is whereby you predict the movement of the currency. I've seen people doing that. I've seen it in the media, people predicting the currency movement according to right now we are waiting for the US elections 2024 I mean. It will be happening in December this year. So many people are trying to predict movement of stocks and prices and commodities and other currencies relative to how the outcome of the election may be. And they also do that with influences of how the campaigns are currently happening. And things like assassination attempts of Donald Trump and other parts or segments of the speeches that he gives during his campaigns are used to track down and try to tell where the market will be going. So fundamental influences. So the fundamental influences, there are many economic factors that may cause an economic bias, which then affects the value of currency pairs, such as GDP, interest rates, inflation, employment, retail sales, trade balance, current account, gold prices, commodity prices, even currency values, fiscal policy, central bank policy, and stock prices. All those affect currency levels. So if you want to do fundamental analysis, then you may very much like to know more about these fiscal policies, stock prices, gold prices, commodity prices, even currency values. Pure fundamental traders tend to focus on the longer term trends of economies. Those judgments are typically derived by analyzing the trends of economic data. If the trend suggests economic growth of a nation, this will positively affect its currency. If the trend suggests economic decline, this will negatively affect its currency. Economic data is released on a scheduled basis. So let's move on to creating a trading plan. I guess this is the last bit of this book, which we'll be discussing here, because the rest is information about the company and maybe quizzes on yourself. We won't be going through this, but later on we'll be looking at another book for things that we may have been highlighted here but not expounded greatly. So the trading plan. Creating a solid trading plan is one of the keys to becoming a successful trader. By detailing all aspects By detailing all aspects of your trading in a comprehensive plan, you can eliminate ambiguity and potentially negative trading behaviors. Many people fail because of negative trading behaviors. Like, for example, you say that I'm buying this now let's look at the example of Mary here. Mary bought at 79.50 and at 80 she was content. So some people, you'll find that at 80 they are not yet content, and thereby they had a target of, let's say, 80.50, but then they wait for the price to move to 80.50. The price moves to that bit, but then they are not yet content. They say, let it then reach 90 and then I'll sell. And then the price goes up and then it starts shooting down. So you'll find that when it starts shooting down, they'll see they are making losses and then maybe cash out or sell at around 73, that thereby making a very, very great loss. So you need to develop your trading plan to ensure that you trade successfully. You don't need to have negative trading behaviors, such as, let's call it, you don't need to have trading hunger, or you don't need to be selfish, and you should have good trading behaviors. They call it positive trading behaviors. That's just what I've said, because here it's written negative trading behaviors. A plan for trading is similar to a plan for any other business. Sure. It's essential to ensure that the business owner or trader sticks with a well thought out and tested approach to growing the business while minimizing risk. So we need to get our trading plan, and then it should be well thought and a tested approach. We don't need to be trying out new things. You can try out, but for a beginner, it's easier to follow an already proven approach instead of making your own. You cannot really afford making those losses when you are beginning to trade, when you have limited amount of money. So elements of an effective trading plan should include all of the most important aspects of the trading process. This should include, at the very least, amount of starting capital. So elements of a trading plan: amount of starting capital to be used for trading, primary lot size and leverage used, primary currency pairs traded, maximum percentage of trading capital, risk on each trade. So the maximum you risk on each trade, reward to risk ratio target, realistic daily or weekly and monthly profit goals. So you have to have your profit goals, reward to risk ratio lined out well, maximum percentage of trading capital, risk on each trade, amount of starting capital, you also need to know that, and primary lot size and leverage used. all that you have to keep in mind before you start to ensure that you have good plan, and well, you keep yourself in line. When you're making lots of losses, you sit down and wait a moment, pause, and re-strategize. Specific daily and weekly, monthly loss limits. So you need to have your profit goals and loss limits, and loss at which a trader stops trading for the given period. Yeah. So whereby you make some losses and then you decide, no, let's wait and we'll try again, let's re-strategize. Specific trade entry criteria according to the tested trading strategies. Specific trade exit criteria, stop losses, profit limits, and or manual exits. Yeah, according to the tested trading strategy methods for managing open trades, methods for managing open trades. And as part of this plan, there should also keep a date. The traders should also keep a detailed journal of all trades with reasons for entries, exits, so that there is an ongoing assessment of exactly how well the trading plan was followed. So